Yeah, we haven't officially come out with those, Kelly. But look, what I would say is that a couple months ago, we became much more compelled by the off-price sector. We kind of saw the tailwinds developing. Trade down was beginning. The middle-income consumers starting to get a little squeezed. Burlington became a top pick. We upgraded Ross stores. We would still kind of echo that. A lot of what we saw this holiday season was value, was really core to the consumer. There's a lot of price promotion. It really plays right into the off-price thesis. So what I would say is Ross and Burlington are still two of the names that we really like right now heading into next year.
Why does TJX not make the list?
It's a different business. I know we all kind of quantify them all in the same basket as off-price, so they're all the same, but they're not all the same. TJX is a much more affluent end market demographic. If you look at Ross and Burlington, their margins are much lower. Their productivity is much lower versus pre-COVID. They've struggled with the low end becoming under pressure in 2022. That's all inflecting now. So they're more of an inflection story versus TJ is just kind of steady as she goes, less exciting.
That's really interesting. And Melissa, how did we get here? This is a little bit of back to the future feel because companies like TJX were some of the best executors of last decade. Then they kind of went haywire during the pandemic.
Yes, we really saw a change in who was the winners and losers in some ways, or an intensifying dynamic during the pandemic. I even heard this from a lot of real estate folks as they think about 2023. They're talking about how retailers want to be close to these off-price names. I mentioned they're seeing a lot of growth. They also want to be close to grocers. Both of those categories, which are value-oriented and necessity-oriented, have seen a surge, and that's intensifying as people think a little bit more carefully about their spending.
That's interesting. Am I wrong in thinking that we had a big luxury deceleration at the end of the year? Why aren't, normally I think of that category as like pretty resilient no matter what, but how would you describe, I know you cover some of these companies, how do you feel about their momentum going into 2023?
Yeah, we haven't seen a lot of pressure there. Honestly, I'd kind of view it a little bit differently. I'd kind of barbell it a bit.
Yeah.
I think the low end, which was under real pressure in 2022, you're going to start to see some of those headwinds dissipate, maybe even become tailwinds. You've got cost of living adjustments, gas prices will be down pretty meaningfully year over year in the first half. So actually low end's improving, high end's resilient. Middle income, like I said earlier, that's really the consumer where we're starting to see the pressure build. And I think you can see that across companies like Walmart or Kohl's or other companies that have kind of called out trade down activity. That's the thing that we kind of look for. So I'd kind of call that middle as being the soft spot.
Would you avoid, I know you probably don't cover the likes of Walmart, Target, and the rest of it, but would that, do you think, be an argument for shying away from what others would view as these kind of stalwart consumer chains?
Yeah, so I can't comment on those specifically because we don't cover them. But look, I would say we have an underweight on Hanes brands. Why is one of the issues we see there is they're very exposed within general merchandise, within the mass partners like Target and Walmart. I think that's a tough place to be right now. I believe those retailers are going to be de-emphasizing the general merchandise and apparel categories into the first half of next year. So that's kind of how from a soft lines perspective, that's kind of how I would look at that.